Well, good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is February 3rd. Wow, it's Friday, February 3rd. Thank God it's Friday. It's about 7:52 in the morning. The market's going to gear up to open up in about an hour and, about an hour and a half or so, an hour and 38 minutes. And as you can see here, the Nasdaq's down 150 points. Ouch. Dow's now not down too much, only about 75. But the Nasdaq is seeing some gyrations. Now, I want to talk to you guys about something. I want to show you a few things. If you look at the technology sector, and I know I've been really bearish on the technology sector for quite some time, and I'm going to explain something to you. When you're timing momentum, remember, we're not day trading, we're swing trading. These swing trades take time to materialize. Now, what you're seeing right here, or this move from the October lows till now, that looks like a trend, but remember, we're still below the 200-day moving average for the great majority of this move. We've only been trading above the 200-day moving average for 1, 2, 3, 4, 5 days. And today we're down, we're already down about half of what we lost yesterday. So I'm anticipating this gap to be filled and for the market to be cooled off. But this is what I want to talk to you about. This is what's been going on with algos. Algos is what's driving these trends that are totally against the trend more so than they ever have. Let me show you an example. Take a look at Apple. Take a look at Apple. Apple literally just broke the 200-day yesterday, all right? And it's now backing away. If you look at Apple, you would say, yeah, that's classic. But see this right here? This bar above the 200-day moving average? In the old days, you would heighten, you would make a peak right around here, maybe here. Now it takes us above, triggers buys orders, confuses and makes people, retail investors, believe that the market actually is going up. I get a bunch of emails or comments on YouTube saying you don't know what you're talking about because the market's still going up and you've been saying it's going to go down. But remember something. Most of my analysis that I do here for you guys is based on a 12-week window. I'm not giving you buy and sell recommendations. I'm giving you market-specific generalities that are supposed to develop over a period of about 10 to 12 weeks. So I don't really think we're too late here, and I think the market's going to come off. But this is pure algo plays. This is exactly what I've been talking about that we haven't been seeing. And you'll see the same type of trading action in Google and all the earnings plays. Let me show you. Very, very similar. Look at that. First bar above the 200-day moving average, and we're already starting to come in. We're already below it right now. Very, 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 very typical. Look at Tesla. Goes up yesterday, not even above the 200-day moving average, already starting to turn off. Now, if you look at momentum levels, I want to show you. Look at the telecom. This is the sector that had earnings. 2/3 of the FANG is in here. Look at where we're at right now. So this is what algos have been doing the last couple of years, and it's been only increasing. They drive the markets to peaks. They make retail investors think that the market's turning around, and then they completely undo everything they've been doing. So if you look at the QQQ, we only had about 2 days against the trend. Really, I mean, this is acceptable right here. But this is pure algo play based on earnings, and it looks like we're going to come back right down. Momentum levels based on the RSIs, I'll show you right now, are just humongous. So I don't think this is very sustainable, and I don't think the market does either because we've already erased half of the gains. I would be shocked to see us continue an uptrend from here that would last more than a few days. But remember and keep in mind, when I give you this analysis, it's not based on what's going to happen the next day. It's based on a 12-week window. If you want specific short-term trades, you're going to have to subscribe to our services. So earnings. Yesterday, we saw earnings on. Oh, boy. What didn't we have earnings on yesterday? We had earnings on Apple, all right? We had earnings on Alibaba. We had earnings on Google. We had earnings on Amazon. Let's take a look at Amazon this morning. I think most things are, right at the 200-day moving average. Are you noticing Amazon, Apple, right at the 200-day moving average? Google, that's not coincidence, folks. That's the algos trying to make you believe that the market's going higher when in reality it's not. And momentum levels confirm that right here. So please, please, please be very, very, very careful. Let's talk a little bit about what's happening today. Now, as I mentioned, the market's down a bit. It'll be interesting to see if it cools off. Now, in terms of news, we got a lot of global data to absorb. Earnings from U.S. tech giants weighted on market sentiment. Oh boy, wait another couple of days. Nasdaq extended Wednesday's rally and posted a 5.25-month high. Thank you, Algos, for completely distorting this market once again. After more dovish than expected messages from Mr. Jerome, I'm not going to be honest with you till you reappoint me, Powell, fueled speculation that the Fed might end its near rate hike campaign sooner than later. That would be fantastic. The Dow underperformed. Remember when I told you that the Dow, there's a huge divergence between the Nasdaq and the Dow? And I was either thinking that the Dow was going to come more than the chips, that the Dow is going to come lower, or tech is going to come higher. And we saw the latter. Yesterday, we had jobless claims coming in at 183. Nothing really crazy. Very, very resilient. But earnings, oh boy, here's where we get to the good stuff. Apple slid over 3% in pre-market trading after iPhone maker posted weaker than expected first quarter report. Amazon dropped more than 5% trading after the tech retailing giant reported mixed fourth quarter result and light first quarter guidance. That's not good for retailers. Google fell 4% in pre-market trading after the company missed expectations. And they're having, from what I'm understanding, they're having a real red alert because of all the AI technology that's coming out, which will completely destroy and undo everything Google is doing. They have like a red alert right now at their company. Today we got non-farm payroll. Nothing really to worry about. The number should be very, very steady. We were at 223,000. We're looking at 185. Anything around 200,000 is very, very steady. What I'm really looking at is on the unemployment rate, and if it comes in at 3.5, 3.6, it will be rather steady. Euro's down as well today. Participants are digesting crucial central bank interest rate decisions. European Central Bank raised interest rates by 0.5 basis point and indicated at least one hike at the same scale in March. Wow. Before assessing its path. Smart. At least they're giving us, they're giving them some heads up. At the same time, the Bank of England raised rates by 0.5 percentage point to the highest level since 2008, delivering its 10th consecutive increase. Wow. China. I think I might have said Japan, but I meant Europe. Sorry if I misspoke. China composite closed lower after mixed economic data raised concerns over quick recovery over the country's data released Friday showed that the cakes and service PMI rose to 52.9 after 4 months of declines. Now, Qualcomm down 3% pre-open. Starbucks down 2% pre-open. Ford down 5% pre-open. Gilead Sciences up 4%, but as I mentioned, momentum levels are coming off, and we are literally bouncing off the 200-day moving average for Google, for Apple, for, let's see if Microsoft is joining that party too. I'm not so sure about Microsoft. Yep, right at the 200-day line. This is Algos, folks. This is what happens when Algos control Wall Street. Without Algos, it would stop right here. Right here. See that? And then Algos come in, drive the stop losses, and then the market cools off. It happens every time. Every time it happens just like that. Volatility also looks like it's bottomed out. Looks like it may be moving higher. Looks like volatility also pulled a number for us. See, look. Goes lower than the base. Remember before, it would stop right at the base, goes lower, gets shaken out, and then comes up. Algos, and more algos. And conveniently, this happens right when tech stocks are right at the 200-day moving average. Momentum levels, stocks in the telecommunications sector above the 50-day moving average. Well, welcome, folks. We are at the second highest level that we've seen since COVID recovery. If you go back to other sectors, just want to show you what we're talking about. Information tech, 92nd percentile. Look at this. Look at that. Very, 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 very high. Honestly, there's just not much more for the market to go. And these algos are doing everything possible to trick you, manipulate you, and make you think the market is in fact going higher. If you look at the number of stocks making 20-day highs, you will see that number is at 541. That's probably the highest number we've seen in 4 or 5 months, and typically when you see it go to about 400 or 500, it typically backs off. So yes, I am becoming increasingly bearish, And I realized that this technology rally outlasted itself. But I'm telling you right now, the last few days, this right here, this is all algos. This is all algos, and I believe very sharply that we're going to revert and come back down to the 200-day moving average. I'm pretty confident in it, actually. Now, before I let you go, if you love good ideas, then I have something that you do not want to miss. If you've uncovered a pricing mismatch in the market and taking advantage of it, it means even a tiny little weeny-peeny 1% move in the stock could lead to gains as high as 31, 41, 46% or more in a matter of days. It just requires traders to disregard a stock's share price and focus on its options. So, if you're up for a good old bargain hunt, who wouldn't? Click the link below, learn more about this brand new way to trade. We closed IYR for 60.8%, 24 hours, our first trade. We're off to a good start. If you want to learn more, follow the link in the YouTube channel and Wealth Press channel, and I hope you have a wonderful, wonderful weekend. Feel free to send me an email. All emails are welcome. support@marketgeeks.com. And I do apologize for sending you on this road on a tech and telling you to short this, but I'm telling you, as I'm sitting here right now, the algos are trying to convince you tech is not going down, but it is. It is. Trust me, it is. Follow the link below, and I'll talk to you guys soon. We need a cool back. Too many stocks are trading above the 200-day moving average in the tech, and they need a reprieve. And I think algos were using yesterday's earnings as an excuse to drive it higher before turning down. I'll see you guys later. Have an amazing weekend. I really need this rest. It's been a while. Bye, guys. Take care. Have a great, great day.